Okay. All right. Welcome, everyone. This is again Stop Losing, Start Trading, the live trading show that me and Rosalie do 3 times a week. I'm Guillaume, the founder of Panoptic, and I'm teaching Rosalie, who's the head of marketing, how to trade options. This is financial entertainment. Nothing. What we discuss here is financial advice. We don't even train ourselves. We discuss trades, and the intern is brave enough to listen to us and trade as well. We'll go over the trades of the week that intern has done, but also at the end we'll also have a recap of the biggest losers and winners of the Panoptic ecosystem with Brendan. So first of all, really, how are you doing today?
I'm doing good. Yeah, kind of seen a little shift in the market recently, but nothing too exciting yet, I think. Um,
You saw something very exciting yesterday too.
I saw something exciting yesterday. I was at a Kraftwerk concert, which is this old electronic band from the 70s. That was exciting. Finally got to feel some joy in my life with the market just absolutely wrecking me recently. But I think we've reached kind of the all-time high in the hypes, and now it's really time. Everything's on sale, right? You got to remember that everything's on sale, and so it's time to build, and it's time to scale it.
It's time to trade,
Right.
definitely. So maybe yeah, the markets have been a bit sideways. There's nothing more. I'll just share for a little bit. We typically go over the markets movement. There was a intense move earlier this week, but since then it's been pretty quiet. We always look at Ethereum. Oh no, yes. Uh, Given that macro is pushing the price up and down, but since last week, very stable. We've seen ups and downs. Some price that is seem to be testing about 1800. Sad to see, but it's true. But overall, ETH price has been going sideways. Bitcoin price maybe kind of on the come up because of some announcements about the Fed, the Treasuries, up to $84,000, almost 85. So very interesting. Again, you can trade options on ETH, BTC, any meme coin on Panoptic, and this is what we do with Intern. So overall, market has been quiet. Nothing earth shattering. I do want to get my champagne and sweet French wine. So again, whenever there's a tariff talk, it seems that the whole market is affected. I don't know if Bitcoin feels the same way, but okay. At the end of the day, hopefully the market is going to pick up and be a bit more quiet for the next few weeks. But yeah, this is the intern portfolio. So intern has been listening to us, it seems, and then maybe a quick recap. Do you remember what we discussed last week, Rosie, about the intern trading portfolio?
Yeah, I think we went over closing positions and managing that, and then we created a new position in the Eigen pool. So that was pretty excited. Chatted about volatility and figuring out how best to trade high volatility tokens.
And there's a little green number here, which is positive, which is what we like. And remember, we realized some profits and redeployed, but even then, every day that goes by, we earn a little bit more. This is the theta of the portfolio, meaning how much you earn per day. And if we're on the sell side like us, you always earn a bit more. And this is what you want to be. If you're buying or if you're kind of trying to, uh, you think volatility is low, you would be paying every day, every block, but then the price moves will be what is giving you money. So price has been stable, so we don't lose on that front, but we earn premium. We earn theta every day. Um, One thing that is a winner, it seems, every week, so we'll revisit that, is that Bitcoin ETH ratio trade. Might be another one where we may want to manage this early or not. But yeah, what do you feel there? What's your take on that trade on ETH BTC ratio?
Yeah, I think it's looking good. I think I'm not sure it'll reach its full potential. So I think maybe it could be a good time to close. How long has it been open?
So it's been open for 7 days.
It's only okay. We can do yeah. We can hold on a little bit longer, but definitely saw a good shift there in the right direction.
And this is one of those options where we relocated liquidity that was misplaced, maybe. So we bought an option and moved that liquidity closer to the price. Starting point was 0.25, now it's 0.23, but at the end of the day, it's directionally right. And normally, when you buy options, you pay as you go. But here, because it's out of range, you pay nothing. So it's a free option, which is great. And both of those, directionality and the fact that we're still in range, again, also tells me that it's the full potential is still far away. If you look, there is a lot of gains to be made. So it's one of those where I simply just hold it. There's not much more we have to do. And one thing that is important is the delta of that strike. So yeah, we don't switch here, but delta is how sensitive it is to price moves. And when it's worked for us, the delta will be very small. Currently, delta is 0.48 or 48%. So we set it up likely at 60%. Now it's 48. It's going to go down the longer the price moves in our direction, but it's also very good. It's a directional trade, 48% delta, meaning that if the price goes down by $1, we make 48 cents. And that's also another signal. It's actually still working for us. If it goes to 25, 1 delta or 0 is when we adjust. But for now, it's still in a good range. So good trade. Just wait, nothing more. We did set up a ticker Bitcoin trade. I know you're a big ticker Bitcoin fan, and you have the swag to prove it. But yeah, what was our maybe yeah what was our intention here with that Bitcoin trade?
Yeah, I think it was just to capitalize on the volatility and kind of be range bound, a little bit more delta neutral. Price is going down currently, and I guess not as
I don't know. The
yeah,
ratio is
yeah,
what matters. So
yeah.
we have the chart here, but remember these trades is ETH as the basis asset. So even though the whole market crashes, if your Bitcoin crashes less, then you earn more ETH in that sense. So the goal is to shift the focus away from price moves in USD terms, but rather in this ETH term. And in that case, yeah, I think it's going it's going up, and we want it to be range bound. It's still in range, but yeah, the end result is that the market moves, but both are fairly correlated, so they move together.
Yeah, I think it might be. Yeah, it looks like the profits and premia are kind of balancing each other out a bit, but getting kind of close to the red zone.
Yeah,
So
very very close, and it seems to be a theme. Every time we look at the position, it's moving right to the edge of where we're profitable. But the key point is that it's still in range, so it's earning fees, and the longer we hold this position, the more the curve shifts up, if you want, and the break-even points will go wider. The last position we had in ticker Bitcoin, the break-even points were larger than the width, and this is one of those where a situation where we were wrong. We thought the price was going to stay range bound, but it was not. But we made money even because even if the price moved, we were in the green zone outside of the range. So hopefully this is going to happen for us. What we want to see is in range a longest time, and this is what we see. So yeah, another good trade. Just have to be patient. This is again 2 days old. Made 0.4% in 2 days in terms of fees. So if we're right, the longer we wait, the more money we make.
I see. So intern closed the old position.
Yeah, so yeah, we can explore. So we can go on the Bitcoin Wrapped ETH markets page. This may seem overwhelming. There's a lot of information about the market itself, about the TVL, the IV. But if you want to see your own positions, you can scroll down and you have your open positions here. This is the one we just looked at. But we also have a closed positions tab here. And if we click on it, we can see the previous trades that we put on. And in that case, let me maybe shift to USD. In that case, two trades, one that was closed a month ago, another one that was closed 2 days ago. Both made money, and both made again $15. We have a small position size, but this is for like how would you trade this? But in both cases, we made money. So we can look at the historical P&L for each trade. They help intern do his taxes, I think, because you can see his trade. But yes, that's also where you can see the previous one. And again, maybe we can revisit the history of that previous trade as well. Clicking on details. This is what the P&L chart looked like. We see the premium, we can see everything, and then at the end of the day, we see how much profits we've made, which is 0.005 ETH. Yeah, a lot of what we allow people is to keep track of your positions, but also interpret play back the previous ones and see how they perform. It's a change. The ETH USDC pair is making money now. It was
Oh,
losing a lot every day, it seemed. That we look now, both positions are in the green, and both positions are making money. And then both are fairly new as well. But if we look at the older of the two, and I'm sure the other one will be the same, we want to be there for the long run. It's a monthly option. It's been open for 8 days, uh, and it's one of those where if we're in range, we collect fees here. Even though the price did move by, again, it was 2,200. Now it's 1,800. It went down by $400. We don't lose that much. It went down by, I don't know, 10%, or even more than that. Um, yeah, 20%. Oh my god! But yeah, the end result is that we're only down by 5%. No, 5% down. We're down by less than that. So we're earning fees. We're getting more paid every day. Market shifts adds fee rate. So this is how we see volatility. But it's another one that is working for us. So we might as well just leave it alone.
yeah.
Um, Anything else, maybe, or to comment about this, or
No, yeah, I think this looks good. Just kind of looking at the fees and also the notional value and collateral. So that's always really interesting to be able to control, a larger amount of ETH with less collateral, since we're just getting exposure, right? So you don't need to put up all your money in order to get exposure to options. So that's
yes, again,
interesting.
this is a very valid point. We don't emphasize it enough, but options are extremely capital efficient. It's like trading on leverage, but you do it in a way that is in your control. It's not 100x leverage where you can get liquidated. It's a you have some collateral. This collateral sits in your account if you want. It's earning fees because of the trading activity, so that's kind of one source of profits. But the other side is that that collateral can help back positions. This one is about, again, $2,200 worth of size. So you control 3,500, no, 2,400 worth of capital for only $500 worth of capital requirement. So you are 4x leverage in that position, and of course more risks. But then the fees also accumulate faster. And then if we have multiple positions netting one another, you can also kind of benefit from that. So trading on leverage is natural for options traders. Uh, if you do a fully collateralized options protocol, you cannot trade on leverage. Here we did it from the core protocol level, and yes, we can do this easily. So not a good trade. Nothing to worry about, even though the price moved a little bit. The other one is the same, but yes, maybe the last one that we've looked at and we recommended Intern to trade was the Eigen pair. And what was the signal that made you kind of want to trade Eigen, maybe, or can you contextualize why we chose this one?
Yeah, I think it was just because of volatility. I think we wanted to tap into a new market and kind of see what was popular in
And
terms of deposits on Panoptic recently. Someone opened this market, and I thought, yeah, high volatility.
and yeah, so high volatility is a very good signal for entry into any market. And also the liquidity in Uniswap was also pretty healthy in terms of like how it was distributed. And yeah, there was some also deposits, so you can trade on leverage. Overall, it was just a very, very good pool to enter into. And we can look at the position that Intern opened, but this one taps into high volatility. Eigen and ETH, in my opinion, are fairly correlated. So it's like if one succeeds, the other one succeeds, and vice versa. That's why we set up a delta neutral trade. Um, Again, a straddle, again, at the money. If you look at the actual setup, it's a bit bearish. And I don't know why Intern does that, but it might be because you might still think it's going to go down, but not by much. So you have like neutral to bearish, but it actually doing what we thought it's going to be. So in that case, another straddle, we're the only ones trading, so there's no extra revenue, but we're earning fees every time there's a trade, permissionlessly trade. So yeah, and maybe how do you feel about Eigen more generally? And people, not many people understand restaking. It was the very, very cool meta for a while, but yeah, what do you think about the Eigen token too?
Yeah, I think it's a really interesting project. It seems like it's nothing that's going to kind of either moon or it's not a meme coin, right? So the protocol has, a lot of really interesting features and things that they're doing, and I think that gives the token an opportunity to stay more stable. So yeah, hopefully it will.
Okay, yeah, for sure. I seem to have lost the screen. Let me try again. And again, maybe we can end this there, but yeah, it's a very cool way to trade. Again, Eigen, you won't find this on Deribit or any other ETFs. Maybe not ever, or maybe in 25 years. We can do this at the first level uh, from Uniswap data, so we know if the token is traded there, we can trade the options. So overall, Eigen, I'm very excited to see where it goes.
Me too.
All right. So I think so. Brandon now will be joining us. So this is losing, stop trading. Again, try to reach out to us on Discord or could be Twitter as well. If you have questions, if you have positions yourself, you don't know what to do, always happy to help. Not financial advice, but we can kind of tell you what we would do. And this is kind of the goal of this show as well. So here's without further ado, Brandon, say, yeah, how are you, Brandon, today?
Hey, it's great to be here. Happy Friday. Markets are up a little bit, so some relief for that intern. But yes, good to be here.
Yeah, and we should do this a bit more often. But yeah, volatility signals is also like the big crashes create a spike in volatility. If you sell options, you're short volatility, so you want this to go down. So I think this is what's happening. That's why Intern has been making money. A lot of traders as well. If you're on the sell side, so all right. So again, a good trade of the week. Crypto trades 24/7. So who knows what's gonna happen over the weekend? But all right. See ya, Rosalie.
Bye. Thank you.
Yep. All
All
right.
right.
Yes.
We'll jump to the second portion of the hour of Stop Losing, Start Trading. This is the best and worst trades where we feature some of your Panoptimus trades on our platform. And we have Guillaume guess and try to beat his score. Last time he got 1.5 out of 4. So maybe we'll pitch a few more and see if he can get a higher score this time.
Let's do it.
All right, so we got a couple of markets. We'll be looking at the ETH USDC market, also the on Unichain as well as Ethereum mainnet, and we'll have a special market this time. We'll look at the Bitcoin ETH market trades. So, which do you want to start with? Do you want to start with some of the best trades or worst trades?
Let's do the worst trades. I think we started with the best first, but yeah, let's do the worst.
All right, we will flip it up. So, starting with Ethereum mainnet on the ETH USDC pool. We will cover. We get a bonus one here. We'll cover 2 trades because things have been bad.
Yeah, I felt it myself. I trade a lot of straddles and delta neutral trades. When the price moves down or against that initial assumption, it always hurts. And like, of course, you don't want to get wiped out. Trade like smaller size is kind of the way to go. So I would say that the biggest loser is probably a short put or a straddle that was very narrow and went out of the money. We saw again a 10% price move in a day. That certainly hurts everyone. So yeah, selling a put option is likely the worst trade.
All right, and what about the second worst trade? What's your guess there?
A straddle that was out of the way. I'd say it's still on the sell side. This is where the risks are more present. Selling options, buying a call option, which is kind of bullish. So if you buy a call and it's bullish scenario, but it's bearish in real time, you don't lose much. It's not like a perp where you can get liquidated. So I would doubt it's a buying of a call. But so yeah, selling a put in a straddle is what is losing, I guess, this week.
Okay, so I heard your 2 answers. The second worst is selling a straddle, and first worst, the worst is selling a put. So let's see how you did. We will share screen here now, and this. All right, can you see this on
Yes.
the television on the stream? So you are correct on this second worst trade. We're down nearly 6% on this short straddle. So someone sold a put and a call, kind of hoping that the price would stay in between the
Oh,
1889 and
yeah,
more.
it's not too bad. So is this still open or they've closed it?
So, I mean, it was open 3 weeks ago and it's still going.
Yeah.
So, as of this week, it is the one of the worst trades so far. But yeah, the Premia was doing decently. It's still
No, that's right. It's straddling
very
the line. I think that's the reason why they may have kept it open because it's still almost in range. So there's some saving grace. And if you're still maybe medium term bullish, and then you don't think 18 it's gonna go below 1900, you may still hold it. And the fees, if you see the premium is accumulating still, so it's trying. So yeah, I would say I would personally close it, but if they kept it open, is I think they hold strong to their initial belief of being range bound between 1900 and 3600 type of thing.
So, not financial advice. Nothing we do here is financial advice. So, please do your own research. But what is the advantage here of keeping this one delta position where if the price goes down further, they're losing one for one, as opposed to closing it and just redeploying with a zero delta at the same spot?
Yeah, so if you can look into the future and it's going to go back to 2500, and whether you look into the future or this is your conviction, I would say that's the only reason. You're effectively buying one, in that case, 8 ETH worth of uh like the position is 8 ETH in exposure, so can still be bullish. Whether you buy it on Coinbase, you want it to go up. Now you've set up a strategy that has a call and the put is effectively also buying 8 ETH, so you may still have a similar outlook. So fees are great. Premia offsets this risk. In that case, they did earn $1,000 worth of premia. That helps offset the losses. But in that case, yes, they would maybe are still in a conviction mode and the thing's going to go up. So you have some delta exposure, but some exposure to the price action. That is maybe what they're comfortable with. And foregoing the fees for a while, meaning that they don't care if they don't get paid, but they just think it's going to go back up, is kind of one way to do this.
Interesting point. Yeah, with the one delta, is that double-edged sword of if you think it is going to go back up, then that would do better than a zero delta.
And in TradFi, you have expiring options, and if your option is deep in the money like it is now, you get assigned. And whether it's ETH or shares of Tesla or something else, you have these shares in your account. And some people, what they do is that instead of selling those shares for a loss, they say, maybe I'm going to set a call against it. So maybe there's another position in this account that is sending a call, and you have kind of the netting will be that you still have some upside exposure. It would be a covered call payoff in a way because you have some intrinsic kind of covered position. That's another one. Again, one position is one thing, but if you look at the whole portfolio, it might be telling a different story. Personally, when I get assigned, I sell, but if I feel maybe generous for myself, I settle calls against it so that it doesn't do a market trade, but rather executes if it ends in the money too.
Interesting. Yeah, we don't have the same assignments here, but yeah, I might have a slightly similar recommendation. I think it looks like when they opened this position, it was pretty much delta neutral. So I'm going to assume they didn't really have a directional bet on the price. So at this point, they might just be hoping it comes back. But if they're still kind of trying to get the double fees where you earn twice as much fees from having two different LP positions, one of their legs is currently out of range. And so I do think if they want to do the double fees where they're kind of not betting on the direction going up or down, they should redeploy down here rather than hoping for it to come back up. But not financial advice.
If I did it, yeah. How do you manage that position type of thing? Yep.
Yes. All right. Well, that is a unfortunate trade that was doing pretty decently until the price of ETH crashed. Let's go to the worst.
Yeah, and maybe just one last thing. They transformed what would have been a 8% loss into a 6% loss. Again, they earn some fees, and that's the name of the game. Directional exposure is not something you control. You just have to manage it. As long as you get paid for it and you do it consistently, this is kind of your edge. You will be always losing less if you sell options. you'll be a bit better risk managed because of that extra income, and then that's maybe kind of the reason why this was not a, I don't know, a $4,000 loss. It's only a $2,800 loss.
Yeah, and that's a good point to compare it to holding ETH, right? Hodling ETH, because on the premium side you get the nice little fees earned, income earned to mitigate that loss, but also the delta started at 0, ended at 1, and so this is on average going to be a lower delta position than holding ETH, which means you also lost less from this position, right, than holding ETH directly.
Yes, and the only risk I see is that since this is done on leverage, you can overextend yourself. You could get liquidated if that price goes down. If you could have less than 8 ETH worth of collateral. So you have 4 ETH. Then in that case, you could be exposed to liquidation. So again, it's all about risk management, but the end result is that there's a lot of gray area because yes, price moves down, you lose, but you win a little bit in premium. So it's all balancing out. And
Yeah, and it looks like the requirement here was 7,442 USDC. If your collateral is in ETH and the price goes down, you're also a little bit more exposed. Whereas if you're in USDC and you have 8,000 USDC, a little bit less volatile on your collateral value, right? But okay, well, interesting points. Thanks for the advice here on this position. Since it's still open, looks like it can be managed if this person wants to. We'll jump to the worst trade. So far you're 1 for 1. I think you said the worst trade is a short put. Knowing your what the second worst trade is now, do you want to keep that answer or go with a different one?
no, I'll keep that answer. And again, yes, I'll keep that answer.
All right, you're
like at the Maury show. I don't know the outcome, so this is real raw emotions that you'll see there.
All right, we won't let you change your answer for probability's sake. So let's go to the worst trade now. Q. Also, yes. Straddle or strangle? Looks like a strangle. So
we've seen this last week.
I think it's still going. So any trade that's still open over the week is fair game for this analysis.
Oh, yeah. The week by week though may be different, but it's true. The current status is biggest loser net. I don't know. Maybe we could have a historical value. It would be a lot of work, but yeah, I don't know how it was 7 days ago, but it's still 13,000 USDC in the hole. But yeah.
Yes, so we are down bad on this one. I think before it was, what are we at now? The price of ETH is 1,900. That's true. Last week, price was around.
No, or at least it did go down actually. But yeah, I mean, we don't know. Yeah, it went from 2,200 to 1,900, so it did go down a bit more. So yes, I would imagine that they are worse off.
Okay. Well, that's unfortunate because that's a 300 price decrease. We're trading 18 ETH of options. We're at a delta of 1, so that's kind of full exposure to that price drop. So I think our recommendation, not financial advice, last time was to close this position because it's a daily option. It's out of range. That range is all the way up here. 2550 is the lower barrier, and we're many percents below that. And so any updated kind of if you were to trade this, what you would do here?
No, again, I would assume that either they are covered somewhere, could be on a centralized exchange and short some ETH to cover for that loss, or they're okay with, again, similar to hodling. They think it's going to go up. Now they have a 1-to-1. Maybe they have another position. I would say that this is a 1 day daily option. So 0 DTE being held for 22 days probably means that they did not get the memo. When you have 1 day option, you should manage it every day or 2 days, similar to the monthly. It's even less than that. So I would say that it's fine. Pretty someone well with some disposable income that can shoulder the loss. But yeah, anyone that's just trading here, start longer term, a week or even a monthly option, and that's going to be a lot of easier to manage and a lot less because dramatic when there's a price move. But yeah,
it's unfortunate because they're also not earning points because they're out of range. Whereas this second worst position is earning points still, at least being in range. But hopefully this person isn't counting on points, because they're not earning points, they're not earning fees, and they are going down. So maybe they're hoping the price to go back up and just return to normal. But yes, I think this is a out of the expiry already position. Okay, well, you are 1.5 for 2 because you got 1 out of 2 legs correct.
All right.
So we will jump to Unichain now and look at some of the ETH trades on Unichain. So same type of market, but we got some more let's say minnows trading on here. So do you have any predictions on the worst trade on Unichain?
Yeah, the unit chain is smaller positions. People are a bit more willing to try out different things. I wouldn't be surprised if it's a very convoluted multi-leg strategy that is still exposed on the put side, but they have some other legs. Uh, and I'm counting that because it's a newer maybe user, they just have liquidity out of range and it's kind of collecting 100 delta. So I would be willing to venture that the biggest loser is a multi-legged trade with not just one put, but be at least a spread or something else with a deep in the money put.
All right, so you're gonna bet on a short put, deep in the money short put with at least one other leg. Let's say we'll give you some leeway here. So let's jump. I believe it is this tab.
Oh, yeah, okay.
And you are correct in that estimate. It wasn't a spread. It is once again a strangle. Similar strangle, except let's see. I think yes, they are both out of range legs. So they sold a put, sold a call, and the price has dropped below their boundary of 2030. Very similar position to the ones we just analyzed here. So
And how long ago was this open?
yes. Let's see.
Yeah, okay.
So this was also around the same time period of about 2.5 weeks ago. Opened around when the price was 2,700. Seems like forever ago,
Yeah.
but it was only 2.5 weeks ago. And
yeah, I
we're
think
now
the
down.
price move was very recent, so 3 or 4 days ago. So I can imagine that while being in range earlier this week, it seemed fine, but because it's out of range, I would also recommend closing it. But yeah, it's nothing wrong on the part of the user here. It's because it's barely out of range that I would close it. But similar to the other one, maybe you're still long term bullish, so you may hold it. I would say that maybe what I came to realize too is that the straddles work more effectively when they are overlapping strikes, like 100%. Because now the call side came out of range very quickly after it was set up, and the put side is kind of working on its own. So I would also personally trade only very like overlapping strikes, like not have that much difference between the two. Because if you want to go wider, you can use a longer time scale. You can even do 1 year. Whereas this, like you for most of the duration of that trade, that call was ineffective. So I would, at least when I set up my positions now, I would also use overlapping strikes for that straddle.
So when you say overlapping, I think you're talking here about the price ranges in Uniswap, right? So the call's lower bound is 26.44, where the premia, the put's upper bound is 32.81. So they're only overlapping from between 26.44 to between 2030 to 26.44, and so I think you're saying these strikes could be closer together.
Yeah,
Where
because
it's closer
personally,
to
when I
what
traded
the
them,
strike.
like historically, it's always very, very awkward to like keep this on because you have one that's out of range totally, and then the both having exactly the same range makes the assignment and the management I mean easier. It's an easier decision. Now we have an extra question mark saying, oh, is that call okay or not? You can still be in range but not. So I would, it just makes the management easier if it's all completely overlapping.
Yeah, I mean, it seems like why would you do such far apart strikes on a straddle? Is it mostly because you don't have time to manage it? Because like you're not going to be earning double fees for a lot of the
You
portion
look
of
at,
it.
the overlapping ranges are your new price bounds, I guess. So in that case, the instead of being between super large, the most effective part, yes, between this 2,600 to $3,300, which again seemed like a good bet a month ago, but maybe not this day. So more generally, just making sure you optimize the liquidity in range means that you have a lot more bang for your buck in terms of theta and what you collect. And when it's split like that, you are kind of always leaving one to be exposed to be out of range.
Well, great advice, not financial advice, but very, very helpful. 2.5 out of 3 is your score on guessing the worst trades here. We're analyzing the best and worst trades for options trading here in the last week. And so we will now jump to some of the best trades. So we will go the best trade on Ethereum and then the best trade on Unichain. Do you have any guesses on what the
I'd
best
say the
trades might be
one, maybe the best one is probably a put option that was purchased and became in the money. So remember, if you have the biggest loser being a put in the money, someone else could take the opposite trade 1-to-1 and get that exposure. And I would say that's probably the most profitable one, a put in the money, a long put in the money. I would say there might be a call option. So call options are also benefiting from price going down, and it has moved 10%, and our positions are like 25% wide. So you could imagine someone setting up a maybe high delta call option that moved further in the money, but you get a lot of exposure on the price appreciation and a lot of fees as well. So a short call and a long put might be uh, the next best and the best one.
All right. Well, we'll see. So, which one is your Ethereum bet? The short
So
call
there's
or the
one, only
long?
one.
Yeah,
Oh, okay. So
we'll
the
just
the
cover that.
one put option that was purchased was on mainnet, and maybe not a call option on Unichain.
All right. Long put on mainnet, short call on Unichain. Let's go to the mainnet best trade. I can't remember which tab, but yes, it is this one. So I think you said
Oh,
the
that's fine. Yeah.
opposite. Very close. So you said long put, but it is a short call on mainnet. And you nailed it. You've got some good market intuition of what's been going on. You know, the price has gone down. And so one of the best trades for price going down is accumulating fees on the way by writing a call and earning those fees, and also profiting from that price uh, bearish price movement, because the short call is bearish. And so it did start out yeah, around the
Oh,
50
yeah. So this is
delta.
also a month ago. Yeah, the price was, oh my god, 2,700. But yeah, this is also one of those series that went exactly as planned, I'm sure. So you start at 50-ish delta, you end at zero delta. You sell on the you in this case sell on the way up, but then you borrowed one ETH, so you paid back less values. But yeah, they, and also because of the fees, because they sold the option, they transform what is a 5% gain into 8% gain, and the fees collect, and this is kind of the gravy on top. So being right directionally is always wrong, but then if you add on top the fees, then you can um, get more, or at least have a slightly different uh, payoff profile.
Yes, that's some steep fee
There might
earnings
be,
here
yeah,
at a certain point.
someone else might have been buying this call. They may also increase the fee that they get. So there's like currently zero Bigoid, but zero purchase. But yeah, there could be also some purchasing that made that trade even more profitable.
Yes, I mean it's a closed position, so it's we don't have the spread info here on how much extra they were earning because the position is closed. They may have closed out anyone else, force exercise, but the position did earn some very
Oh,
nice fees. You know you're in avalanche
yeah. And
territory
can you go back
here.
to the
Some downhill
fees
skiing.
are about 200, yeah, $250 out of 1,200 of collateral requirement. So when we calculate the P&L and the profits, it's based on the notional value and not on the collateral. So effectively, it's a bit like fairer, I'd say. So your target, instead of going 50%, you can say I'm going 5%, but then it's the same thing. But yeah, in that case, $250 on only 1,250, like 25% gain on the collateral that you put at risk to some extent is pretty good too, only on the fees. And then you have the price move as well. So I'd take that trade any day of the week. It's kind of how you profit from a bearish environment.
Yeah, I mean, they're getting about 5x leverage here on the notional. So they're making closer to 20% in fees. And that's exactly 1 month. So, annualized, you're looking at something
Yeah.
quite larger, over 100% fees annualized. And then with this gain of 8%, 5x leverage, you're something closer to 40% annualized.
Yeah.
That's huge. This is a
And I
huge
realized
position,
the
12
the
times,
the position
500%
requirement
annual.
also was slightly higher when it was set up, because being in
Ah,
range
true.
adds like some risk, but then now it's out of range. So again, whichever way we think about this, because it seems to be more than 5x, which is what we allow. But at the end of it, it's because it
Right.
was higher when it was set up. So this is cool.
Yes. So either way, it was a great trade. Looks like they were right in every aspect. And as we know, when you're right everywhere, then you're going to do well. But the nice thing about options is sometimes you can be wrong on one side and right on the other. But in this case, they are double right. So you are at 2.5 out of
Yeah, this one was
4
wrong
guesses
technically,
correct.
but yes.
You're very close. Let's jump to the unit chain best trade. I think it is this one. All right. And
Another
you are
call.
correct
Yeah.
on this one. So short call as the best trade on unit chain. Quite similar position, opened around that 2,700 price,
Mm.
closed after the position successfully entered out of the money territory. So they wrote a call and made the right prediction that the price would go down and earned fees on the way. Just a smaller position. This one is 0.3 ETH, but still pretty big gains here
And
on
can you go
this
to the
side. So
Premia tab? So the this is a weekly option. Yeah, there we go. The that position paid off, I guess, after a week and a half or 2 weeks, if you look, because it went out of range on the left. Like the initial fee accrual was good, and then it went out of range the correct side, meaning that they were correct, but then they kept it on for an extra 2 or 3 weeks and gained a few more uh again tokens in terms of premium.
yeah, there was like one day where it
Yeah.
came back in range and a
So you
few
could
more
have, like,
fees.
if your intention was really to be bearish, you could have closed it, redeployed, get double the fees to some extent. But yeah, and otherwise, it's one of those things where if you're right, you're making money. Why fret about it? But yeah, the weekly means that in that case, it paid off after a week. Keeping it for 2 extra weeks, they did not add much to that trade.
Yeah, maybe we need to go over some of the medium trades
Yeah.
one day. But very very interesting here with the short calls, just the bearish positions doing quite well in this bearish market. So you are 3.5 out of 5. Very nice. We have some bonus trades before we end the show. We're covering the best and worst options trades of the week, and we'll look at the Bitcoin ETH price. So I know when you're trading with the intern, you like to look at it inverted. In my mind, I like the bigger numbers, but basically the Bitcoin price has been doing a lot better than the ETH price, and so the Bitcoin ETH price has been going up. If you think of it in terms of ETH as the quote. So, what are your predictions on the best Bitcoin ETH options trade and the worst?
Might be I know that we've looked at this market a bit on the trading show. Um, so now you're flipping it, but yeah, the worst trade is probably what is either a short call if you look at one side, or a short put, because if the ratio went up and then you had a bearish trade, then it's bad. The way that we trade on the show is that we use the smaller number. So if there's a put option that was sold, and this came in the money because it went down, is fine. And I would say the best one is more likely to be it was range bound, didn't move much, even though it went down, it was fine. So at least a straddle that is earning fees, and that fee meant that they made money.
Yeah, so this is actually an interesting point to make. I don't think it's trivial, but I think you're saying if you look at the ratio in terms of ETH compared to Bitcoin. So ETH is the risky asset, Bitcoin is the quote, and you traded a short put. That means the ratio went down, and so the short
Yeah.
call, right? So the ratio went down, and the short call made money. Now, if you flip the ratio and you're looking at Bitcoin as the risky asset and ETH as the quote, the ratio went up, and you could do the inverted trade, which is a short put. So a short put would have made money if the ratio had gone up. So short puts and short calls are actually a short put on one market is a short call on the flipped market. Basically, they're actually equivalent
And it's on
positions.
math. If
And
you go to the Uniswap V3 white paper and then you like the formula for the price, the amount of token 0 and token 1, you could do the same math but flipping the two, and you get the same answer if you sell a put on one side or sell a call. And mathematically, it's just the way it is. Like you flip the price, flip the strike, flip everything. It all comes back to the same formula. So it's puts all the way down. Always has been. It's just that if you trade a call, it's just in the flipped space. But yeah.
yeah, that's so interesting to me. A beautiful kind of result that we can show even with this toggle
Oh,
if you want to
yes.
trade the inverse
Advanced.
price.
Yes.
But let's go to
Yeah.
it then. I think you're saying the best trade is either a short, well,
The best
basically
trade is definitely a straddle, I'd
a
say.
short.
That fees went their way.
Oh, straddle. Selling a straddle or
Selling a
buying?
straddle.
Selling a straddle, earning fee. Okay. Well, let us check out the best trade
Ooh.
here. This position has been open for a while though. So in the last week, it
Ooh.
has been
Yes.
doing even better. So it was opened when the ratio was 28 Bitcoin. The Bitcoin price was 28 times the ETH price. And now the Bitcoin price is 43 times the ETH price, mostly because ETH has gone down more than Bitcoin. And just quick commentary on that. Do you think the ETH price is falling relative to Bitcoin more because just of the larger beta, kind of like ETH reacts a bit more than Bitcoin, or is there something fundamentally unique about ETH
I
that
mean, I
is
think
important?
it's something unique about Bitcoin. Bitcoin has an ETF, they have futures, they have options on the ETF. It is on a class of its own. And in that case, boomers buy and sell options, buy and sell Bitcoin ETFs. They are exposed in a way that you don't see this in ETH at the same level. There's no, maybe, I don't know if it's just the options play, but the TradFi exposure to Bitcoin means that it behaves more like a growth stock and less like a cryptocurrency. And I would say that ETH, even though it has an ETF, it's not as much in the public knowledge base, and Bitcoin outperforms pretty much everything now because there's a bigger pool of market or liquidity that can trade against it. So I'm sure if we were to look everything in terms of Bitcoin, like everything's going down. So that's the strength of Bitcoin dictates that ratio. Again, without being bullish or bearish ETH, it's just the new influx of money goes to Bitcoin first. Now it's locked in an ETF instrument. It doesn't flow as well to the altcoins and Ethereum. So it's just a different. It's on its own path in a way, and that's why it's so outperforming so much.
Very
But
interesting.
yes,
Yeah,
buying a straddle.
good
This is
take.
a good. They bought it at the money, meaning that it was right in the middle. Very quickly, the price went outside. I think they're not paying anything, are they? No, it's still in. Yeah.
Currently, they are, let's see,
Can you
39.84
look
is
at the
their upper
premium tab?
bound.
I'd say that this is probably like this for a while. Yeah. Oh no, just recently. They've been paying every day that they were kind of not quite right. They paid. Now they just left that range. If I were the holder of that long, I would close it and realize that sweet, I don't know, 40% profit, and be happy that I was right. This is a long volatility play. Person didn't have any up or down kind of bias to them, so buying the money straddle means that you will benefit from any price move, and yeah, worked pretty well.
I'm going to take a slightly different non-financial advice recommendation, which is they're now barely out of range, right? The ratio is 43x, and they went out of range at the 39.84x ratio. So it's kind of a free option, right? And they got this full 1 delta exposure.
Yeah, it's true.
If the thesis is Bitcoin ETF and ETF is not as prominent, then nothing's really changed with that thesis, and so it might make sense to continue
No, that's
to
right.
hold
Sorry
it
about
here
that.
at.
It's a free. Yeah, I still had the option seller mindset, but yeah, it's a free option. Actually, keep it. And if you click on the strike of that call, 31.34, you can see who sold it. And the only risk is that someone will come in and force exercise you. But if that person now has two legs out of range, they may do it. But if it's something part of the broader trade, they may not. So yeah, you have to do some spying when it loads. Let's see what the this user's position look like. But yeah, it's a free option. Maybe this one is on the other side. They're losing because it's selling an option. Loading slowly. Yes. Oh, okay. Yeah, so that's one of those. They probably opened it more than 22 days ago then because it's their own project. So that might be one option that you should manage, and that will result in forced exercising that other options holder.
Yeah, we give you these nice out of range red labels to let you know something is potentially
Yes.
wrong with your position and needs to be managed. They are doing a 2x quantity, so this contract size is essentially doubled
Interesting.
there. But yes, interesting enough to build a. I love that you can just spy on the other side of your trade. Like, I doubt you can do this on most options.
They want to keep
exchanges,
it.
right?
They want to keep it
No.
secret. They don't want to have this public, and I don't know if it's gonna hurt us at the end. But then you want to have the alpha to yourself. But then there's a new. It's a new realm when everything is public. It used to be people shouting in a pit, so you could hear everything was going on to some extent. Now it's like electronic, so unless you really look for it, you can't know. So this is bringing us back to the good old days of floor trading.
If you listen hard enough, you'll get some alpha potentially. So nice guess. You're at 3.5 out of 6. So final guess for the worst trade here on this market over the week.
Maybe it's the opposite of that. That one straddle, maybe.
Oh yes, it might be actually. Let's see.
But what
All
I
right,
said,
short straddle.
I thought the straddle would be the biggest winner, and I was wrong. I don't know what I said for loser though, but might be a straddle too.
Yeah, we'll let you guess now because I don't think I asked you, but I can't. That is, yeah, this is a different
They closed it. Yep.
straddle. But yes, they did barely close it last after our former options stop losing start trading last Friday. But it is another short straddle, very similar range. They were looking to make premia between the 24 and 39 ratio, and the ratio has now hit 44. So they've successfully closed that position. It looks like the ratio potentially has been around 44 for quite a while. Current because yeah, so they closed it right around the ratio of 44, and the ratio is also right now around 44. So
maybe they redeployed
very interesting.
in range. Again, this is one of those things where you take it like a grown up, eat the loss, move to do something else. In that case, it might be either in range now and making money, or not doing anything and not losing money, I guess. Mm-hmm.
Yes, indeed. So great job. 4.5 out of 7. So just over 50% on today's predictions for the best and worst option trades. This was wonderful insights to learn how to better manage positions on Panoptic and in options trading. So thank you so much, Guillaume. Not financial advice. Nothing here is financial.
Yeah, we say it often, and it's because no, that's not financial advice.
Yes, we want you to be a nice independent thinker. Take everything I say with a grain of salt. But Guillaume, I appreciate your insights.
Amazing. So again, this was it. I'm glad to see people trading, people making money, people losing money. A lot of what people think about options is that it's a zero sum game, because oh yes, I made money, but someone else lost money on the other side. But in Panoptic, we have this extra, like, this unique feature that Uniswap trading gives you a fee. And if you are trading against the pool, you don't even need someone to lose on the other side. You can actually earn the fee. So that's a different way, a new way. So the examples we shown, one of them was kind of the flip side, but it's very, very kind of a new way to think about, again, options and how profitable it can be. So
Yeah, I mean, liquidity is always a issue with the DeFi option markets, right? But the one great thing is you can sell an option. There might be no other liquidity on the other side. Doesn't matter. You can still earn some premia, and that's coming from the Uniswap spot traders,
yeah,
as you're mentioning here. So it's a great thing to know for these markets. We do have one announcement before we end the stream. Make sure to deposit before 11:59 Eastern today. That's 8:59 p.m. Eastern Pacific time. Sorry, and I think 3:59 a.m. UTC time tonight. So make sure to deposit at least $100 into any of the Pips pools on grow.panoptic.xyz for a limited time 2x Pips points boost. So you have the opportunity to snag this extra boost if you haven't deposited in the last couple of weeks since we launched Grow. So make sure to head to grow.panoptic.xyz. You can start your options trades today and stop losing and start trading and snag an extra points multiplier here.
that's it. All right, that's it for today. Thanks everyone for joining. Thanks Brendan. Thanks Rosalie. And yeah, have a nice rest of the week and good weekend. Yeah.
Take care.